I think the reason why we chose to enter this built-in kitchen appliances segment is because over the last 18 months or so, we have done fundamental research into different potential segments where we could enter to identify unmet or underserved consumer needs, and to look at the size of those potential segments where consumer needs are either unmet or underserved. And based on that, the inbuilt kitchen appliances segment is one area where we found, I would say, reasonably sized white spaces. And through the research and development we have done over the last 12 to 18 months, we have been able to develop solutions which could cater to these unmet needs. And that's why we chose to enter the inbuilt kitchen appliances segment today. Yeah, this is approximately a 2,500 crore market. The segments that we are talking about roughly growing 10 to 12% per year. Our objective, our goal is to become in the next 3 years have a market share of at least 10%. That will put us in the top 3 in this market. So the expectation is 300 to 400 crores revenue from to reach a 300 to 400 crore revenue level in next 3 years. Obviously, as everyone is aware, I think we have been facing a strong commodity-led inflation for the last 6 quarters or so. Just to give you perspective, the cost of our products have gone up nearly 30% in the last 6 quarters. In a normal year, this would go up 3-4%. So it's many times over, maybe 8-10 times the normal pace of inflation. We have managed to mitigate this over the last period in a combination of price increases. So while costs have gone up 30%, price increases have been more in the tune of 18 to 20%. The rest of it has been mitigated through partially a strong cost reduction program and also some level of mix improvement. We do see some in the last few weeks, some softening of commodities. So we hope that that trend is going to continue, and we hope that we do not have to significantly increase prices going forward. But that is what we thought maybe in January before the war started in Ukraine. So one cannot be 100% sure. But we think, looking at our track record, and if I look at our competitors, how they have managed this inflationary environment, I think we have done significantly better. So we feel, confident that even if we were to have some such inflationary situation in the future, also we will be able to mitigate to a large extent. Now, having said that, of course, it has some impact in the short term in terms of demand, but that's something we need to watch and see how we play as we go forward. Last 2 years, of course, has been badly hit because of the pandemic. So if I compare with the last 2 years, obviously the demand is pretty strong, at least in the early April and May. But I would say that, with the significant level of price increases that have happened over the last 6 quarters, towards the fag end of second half of May onwards, we do see some stress on demand. While the price increases, may actually camouflage the fact that the volume demand is under a little bit of stress, and that's not unexpected. So that is, in spite of the fact that there has been a very harsh summer, we do see that there is some stress on demand in the last few weeks. But let's see how it pans out as we go forward.